Hey guys, welcome back to the channel, and I hope you had a great weekend. And we've finally had our 2% down day that we've been looking for. This first 2% down day all year. And unlike all last week, you can see where the market gapped down, held and rallied, gapped down, held and rallied for 4 days in a row. Looked like it was going to do that again today, but nope, we broke down and held and finished pretty weak too across the board. For those of you watching my channel on Friday knew I came in today 60% net short and did pretty well. I hope you did as well. Okay, so let's go through the charts. We'll go back to the daily chart here, and you can see we've finished quite weak. And I'll just go over and show you the breadth today. So there's quite a bit of bearish breadth out there, except for energy and consumer defensive, a little bit of healthcare, defense, and utilities didn't really hold up either. Economic data we had out today, we had PMIs come in a lot better than expected, which sent rates up, which I'll get to in a bit. And as the trend in the housing market, you've heard me talk about it, home sales expected to come in 2% month-over-month growth, actually came in negative 0.7, which was a lot weaker than expected. Fear and greed is surprisingly still on the greed level at 63 and quite elevated. And we've also had retail traders pouring a record 1.5 billion into stocks in January. So that's setting up for what could be a pretty good correction here. We've also had corporate insiders sell into this rally as well. But back over to the charts, and we'll just keep moving through. You can see all the indices finished down 2% lower today. Small caps were off 2.9%, and just coming down to the 50-bar VWAP, all international indices were off. Had volatility pop up, especially up the front in 9-day. Had a pretty good pop there. VIX 30-day. We actually shot up to 22.8 and have held there, and we've have gapped up. If you look, we did gap up back in December and it fell over the next day. So the question is, going forward, is this the start of a bigger correction, or are we just volatility going to fall over tomorrow? So stay tuned in and we'll go through that, and I'll let you know at the end of this video how I'm positioned going forward into the week. We did have a few puts being bought today, as you would expect, with the put call ratio finishing at 1.04. And look at the spreads of cyclical growth, high beta versus defensive sectors. We had high beta versus low volatility off 2% today, and so that has definitely turned and rolled now. And we can see with growth versus value and tech versus SP, although small caps is just kind of trending a bit sideways there. And look at the story today. Look at the 10-year, 3.96, up 3% today with those PMIs. And as you've been hearing me talk on the channel, look at Fed Fund futures in September. They're pricing in 5.36%. We're just walking the line here on what looks like a strong parabolic uptrend that I've been talking about ever since we've popped up here. So that's really strong. We're out into blue sky here. Same with December Fed Fund futures implying 5.23%, and that looks like it's got some pretty good momentum in it, which is bearish for equities. And with that, we've had Treasury sell off 1.9%, high yield down 1.5%, and we've broken this trend line, but we are down at the bottom of our buy-sell band, and the market still is technically ranging, as you can see in our range strength indicator. So it'll be interesting tomorrow to see whether this holds or we continue through, because we did have quite a lot of volume today. And so this could bounce tomorrow on this volume, but that's what we'll be looking to see tomorrow, whether we can get a continuation of this move. Dollar, I would have expected the dollar to move up a bit higher today, but we're still holding this nice bull flag formation here and trending up. Bitcoin came off as you'd expect and looks to be possibly putting in some sort of top up here. Commodities actually would have thought would have been off a bit more with the higher rates and dollar, but actually held up. Dr. Copper doing his own thing, actually gapped up and almost 2% on a small little doji. Gold off a touch. Nutty gas, glad we got out of this thing on Friday, just can't stop going down another 7% today. And look at this across all the stock sectors. Red. ARK was off 6% today. Ouch. discretionary off 3.3, semis off 3%. Communication sector, now look at this big turn off this island reversal back down to its 50 bar VWAP already. Energy held up the best today, just approaching this support line here. And we've also had home builders. Yeah, if you remember, if you've been watching the channel, you would recall I said up here we're a good short because of the divergence in price and home builders, and the fundamental data coming out in the home building market just doesn't support this move up in home builders. And so with those weaker data coming in today, the market has gapped down and fallen off almost 4% home builder stocks. And defensive held up pretty good too. If you're watching the channel, you know I like defensive stocks. That wasn't even down 1% today. And staples held up the best. So a bit of a rotation into defensive sectors here a little bit. But all the high growth stuff, you look at this, retail off 4.9% hard, below its 50 bar VWAP on volume. Moving forward, BlackRock barometer down 2.8, Apple rolled over 2.6, and Tesla off 5%. And with that record retail buying, a lot of it's piled into Tesla, and as usual they always pile in too late, so I would not be surprised. This looks to be putting in a bit of a technical short-term top. I would not be surprised to retrace back down to 166 or down to this 155 earnings gap level, which I do expect to hold. Over to meme stocks, as you'd expect, off hard today. The AI theme, only exception was AMC up 16%. Not too sure why, I didn't dig too deep in that, but no way I'd have chased this, and wouldn't be surprised to see that roll over tomorrow or the next day. Active today was Walmart and Home Depot out with their earnings. Walmart put in a big bullish engulfing, and both kind of said the same thing on the consumer. They said inflation is hurting, there's still some supply chain disruptions, and the consumer is spending more on staples and less on discretionary stuff, electronics and stuff they don't really need. So that was kind of a soft outlook, and with that we had Home Depot off 7% and finishing on its lows, so the market really didn't like that. Okay, so now that we've looked at the market given a bit of a bird's eye view, is this start of a bigger correction, or is this market going to find a bid again? So we can see that the spread in high beta, low volatility is definitely rolled. I've got a feeling there's still a bid in the market out there. We've had our first 2% down day after gapping down all last week and holding. You can see the SP's just closed below its 50 bar VWAP. NASDAQ's not quite there yet. Dow's definitely under it. Mid cap's just sitting right there on it, and same with small caps. So we're still in an uptrend, technical uptrend this year, and this pullback might already be over. This could be it. So tomorrow there wasn't a huge volume today on this pullback. Even NASDAQ came in below 21 bar average volume. So there wasn't huge. We did finish weak on our lows here, and volatility did pop up as you'd expect. Although 9-day didn't really take out two highs, and the 30-day has popped up. The last time we fell over, except for back in August when we popped up after being in a downtrend for a while. That kicked off a downswing in the market, and volatility has been trending down since October. So we are overdue for an upswing in volatility. Really hard to say right now. I wouldn't be surprised if we find some stability tomorrow in price action and just put in a bit of a spinning doji. Might sell off early in the morning, draw in a few sellers, and then we might hold. So I'll be looking for the bids to come in and hold. So I came in today 60% net short, had a really good day. I actually found some long setups in the defensive sectors and defense stocks and food stock staples. But I'm still short a bit of tech as well. So I actually got a bit more towards neutral today, and I finished the day 20% net short. So that's what I'm going into tomorrow, 20% net short. And we've got a bit more data coming out this week. I'll just show you. We've got tomorrow FOMC minutes, and then on Thursday we've got jobless claims. We've got a few Fed speakers coming out later this week as well, and then Friday we've got a personal income data, so more inflation reads, and home sales, so more on the home markets, which I expect to be weak as well. But fear and greed still at 63, which is interesting. And with those retail traders pouring in a record 1.5 billion in stocks, which was more than the peak in the meme stock craze in 21, that to me, that's the recipe for a harder pullback here. So I wouldn't be surprised to see the Qs down at their 50 bar VWAP, and we could possibly put in a Fibonacci 50% retracement down to 287, so a bit below it. But if we're going to have a bull market this year, then that 50% retracement really has to hold. So tomorrow I'll just be looking for some bids to come into the market, which has been the trend all year. Okay, so that wraps it up. Thanks for tuning in. Just a bit of a quick one today. And if you like this video, hit subscribe, and I'll be back tomorrow afternoon to go into price action tomorrow afternoon. Hope to see you then. Thank you.